Hello traders, this is Alla Peters, founder of Fibonacci Trading Institute and proprietary Fibonacci trading method. In this webinar, I will be sharing with you how I developed the method, how you can use the method, how to choose Fibonacci levels. But first, please remember, never ever trade with risks you cannot afford. And always and forever, every question I answer for education purposes. In 2008, I was a very successful investor. I invested in stock market very heavily. I invested on fundamentals. In 2008, stock market was crashing, spectacular stocks were collapsing. Fundamentals did not matter. In 2008, I was fortunate enough to spend time studying charts and question everything about markets. This is a stock that I was holding. In 2008, Chesapeake Energy, one of the top energy stocks in United States of America, was at Fibonacci reversal zone. At that time, I did not know that yet. At that time, I was simply questioning, how is it possible that stocks that have such solid earnings, solid fundamentals, collapsing completely? Now I know extremely clearly. If fundamentals and earnings and indicators worked, wouldn't everyone be a Bill Gates? Somehow they do not work. And in 2008, I started seeing very clearly that market is not random, that there is a lot more to the story than indicators or earnings will ever be. By the end of 2008, I developed first strategy that still remains core of the course, strategies that I teach today since 2011 to traders, from beginner to hedge fund trader, strategies that applies to any instrument and any time frame, and has extremely high accuracy, no matter what you trade. Here's a chart from our day trading room from today. Here is proprietary Fibonacci support that was the key point of entry this morning. And when students were lagging in this morning, they kept reporting, taking trades well before trading room open. As hand holding in day trading does not work. Rules are met, you take a trade. During trading room hours, we had about 5-6 trades. We analyzed those with students after the trading room close. Every single trade, every single level, based on key rules. Rules I developed years ago. Rules that apply to any instrument, any time frame. And as you will witness throughout the webinar, and as I will answer your questions, formula remains the same. Fibonacci levels identical on any instrument and any time frame, no matter what you trade. If I will take this chart and I will ask you a question, what chart is this? Why would that matter? Take a look. This is price action. At the end of the day, every single instrument on the planet has exact same price. And if you master this, you can trade any instrument, any time frame. As formula remains the same. The only difference, trader psychology and risk management. This is S&P hourly chart. And if I convert this chart to a different chart, you will see very clearly. Price action remains the same. This is no longer S&P. Why would that matter? Price identical everywhere. And if you master price, you can trade any instrument, any time frame. And that's what I realized in 2008, and that's what I devoted full-time since. Fibonacci and price action only. I realized that Fibonacci present in everything that surrounds us. This golden ratio, this special dimension of spirals, triangles, and rectangles surrounds us in everything. No matter if you take a look on reflection in the mirror, Mona Lisa reminds you that symmetry. Look in the mirror. Why is human body so symmetrical? Why is everything that surrounds us in nature has this formula? This exact same mathematical sequence applies to the markets. This exact same formula present on every instrument and every time frame. And that remains the key. And what's essential and crucial to understand? Fibonacci and indicators have nothing in common. Fibonacci is natural predictive tool, indicators artificial, indicators delayed. Fibonacci based on a mathematical sequence that surrounds us in everything. Indicators, you have to pay the fees. They apply to some instruments, they don't apply to others. In fact, if you ever found strategy that works, that strategy should work on any instrument at any time frame. Why wouldn't it? Price the same everywhere. Strategy should work everywhere, not only on one instrument, not only on the time frame. The only difference between every single instrument is liquidity that determines volatility. That's the only difference. But market structure, market formula, identical. Nothing in common between Fibonacci and indicators. Fibonacci is predictive, indicators are delayed. This is a chart that's been present in the trading room since 2011. As I teach in long-term Fibonacci class, next week we dissect this monthly chart, where price had shown you very, very clearly. Bullish rally started in 2009. Sell-off had taken a major pause at this key proprietary Fibonacci support, where bullish rally took off with vengeance in 2011. And this is the level spelled out by the price years in advance. These Fibonacci levels can remain for many, many years to come. How to trade these levels, you must know the rules. This is key Fibonacci support that was respected by massive bearish correction of 2014, 2015, 2016. And as I said for years, as long as this level is respected, bullish rally will go on. And this is a chart I use when I work with institutions. Next 3 days in New York. As institutions invest long term, using these levels, using this weekly chart, my favorite chart of all times, present in the trading room for years. Bullish rally started at this reversal zone, and as I said at the start of 2016, this is a bullish rally we have not seen even in 2009. Bullish rally reached this unforgettable hot pink color and reminded you, this is the end of the minor trend, never acquire position near. And as I said for years, price is heading here. The key Fibonacci support right now respected. 2500 is a key. But the gap between 2400 historical high and 2300 will remain. However, in order to place a trade, you absolutely must know the rules. Speculation in trading, speculation in investments are not an option. And this is exact same level that's been present on Apple. Despite the worst earnings, Apple rallied from this Fibonacci support. And price reminded you in 2015. Spectacular earnings did not mean a thing when Fibonacci reversal zone was reached, when Apple collapsed 40%. Identical formula to what you just saw on S&P, as formula remains the same. Fibonacci identifies these levels far in advance. And if you understand anything and everything about hedge funds and institutions, I would highly encourage you Google how Valiant had shaken the world of finance. when institutions had been buying Valiant close to reversal zone at 220, and top hedge funds in US been losing billions and billions of dollars. As I've been writing articles stating this is the worst idea ever. How is it possible to buy into reversal zone? And as many students show each and every day, after one class, most after a couple of weeks, they know how to identify these levels. They trade a whole lot better than top hedge fund in America will be. This is a performance of fund that's been buying Valiant into reversal zone. Fundamentals did not matter. Valiant had fundamentals that had been absolutely stunning, close to reversal zone. Think about it. Formula in life is simple. If fundamentals and earnings, basic Excel spreadsheets meant something, wouldn't everyone be a Bill Gates? If indicators meant something, wouldn't everyone print money? The only thing that works is Fibonacci. Fibonacci will give you accuracy. No delayed indicators ever will. Fibonacci is the only predictive tool that you can use for day trading, you can use for position trading. And if you know where Fibonacci reversal zone is, you are not shorting market because Trump won the election. As we discussed with students days and weeks before election, Fibonacci reversal zone is present, you are not shorting the market. It doesn't matter if it's Hillary, it doesn't matter if it's Trump. Bullish rally stepped in with vengeance. You know where reversal zone is? You trade better than Soros. You're not shorting this market. Success rate shorting into reversal zone 20%. So if you were surprised that market bullish rally took off, you would not be surprised if you knew how to use Fibonacci levels, how to apply Fibonacci levels. And you also would understand completely well. This is daily reversal zone, market in massive correction. And as we've been discussing with students, why in the world are buyers coming from this level? Simple bearish correction that came from this reversal zone until this reversal zone. Reminding you, trade with institutions, never against them. As formula remains the same, doesn't matter what you trade. And that's exactly same reversal zone that played out on day trading chart on Monday. And that's exact same trading reversal zone that played out on Friday, as we discussed in our long-term Fibonacci class last week. And this is a level that can remain in a play for days and weeks to come. How to trade these levels? You must know the rules. Schlepping Fibonacci levels randomly on the charts, never an option. And that remains the key. Fibonacci retracements can only be used when rules are met. Fixed stops, speculative entries, never an option. Price show you where the stop and entry must be. Fibonacci levels give you precise targets. If you're blocking your charts with indicators, you do not master the markets. You master indicators. When in fact, no indicator on the planet will tell you with extremely high accuracy where your profit targets are on your minute charts, minutes in advance, on your daily charts, days, weeks in advance, on weekly and monthly charts, weekly and months in advance. Fibonacci is the only predictive tool. Indicators are delayed. So don't be like Jim, who spent $400,000 on indicators and 20 years of trying. As this is one of the mentoring students who came to me after trying forever and investing fortune into indicators, not the markets. When in fact, this is all that matters. This is what you must master. And if you do, you can trade any instrument, any time frame. And that's the key. Do not block your vision. Pay attention to pure price. So what is Fibonacci and how is Fibonacci calculated? This is the core to the markets. These numbers. Every single number matters. Every single number is what creates symmetry in the markets. Every single number formed by sum of the previous two. 0, 1 forms 1, 1, 2 forms 3, 2 and 3 forms 5. This is the key to the markets. This is the numbers you want to trade. If you're trading numbers other than this, they do not hold the power that Fibonacci numbers do. And this is what I'm teaching in the course every day. And this is the core to the method. Market consists of maximum 5 Fibonacci wave formations. Knowledgeable trader acquires position at the inception of the trend. Most powerful inception of the trend comes always from reversal zone. Here is the example. Here is oil weekly. One of the graduates of the course kept sending me emails at the start of 2016. Fibonacci reversal zone is reached, acquire position at the trend inception. Most powerful point of entry plays out here. If you miss trend inception, you do not trade against the trend. You do not touch wave 2. If you do, you'll love trading with much lower success rate. If you don't, you ignore counter trend move, you stayed out of bearish correction, and you look for your point of entry at Fibonacci support again. Not shorting the market, but buying if you understand that bullish trend is major. You also understand as a knowledgeable trader. Another wave 4, counter trend move. Do not trade wave 4. Walk away from the screen. And if you do, you will be very accomplished trader. As long as you play by the rules, as long as you entering at the inception of wave 1 or wave 3. That's the key. This was chart from last week. As last week we dealt with institutional support. This was quite powerful, as this correlated very clearly with long-term levels. This is where you pay attention to your point of entry, as you are not shorting the market when institutions buying. You are not interested in this. You are interested in long point of entry, trend inception, and wave 3, 1 and 2. And if you start acquiring position this high, you are asking for trouble. Spectacular bullish push does not mean a thing, as knowledgeable trader never acquires position near reversal zone. Bad idea. And that's the key. And that remains absolutely crucial. No matter what you trade, no matter if you trade S&P as day trader, no matter if you're paying attention to long-term investment decisions, no matter if it's Tesla that took off with vengeance from crucial Fibonacci support, famous hot pink level. Every single time price comes to this core Fibonacci support, you never short into. That's simple. You never trade against the trend. Here's a couple of my very favorite, very old slides that remind you the importance of this level. This is Euro. The slide since 2015. When I said short on Euro, you will see next at key Fibonacci support. Hot pink level. Never ever ignore that level. Did I know in 2015 that price will respect this support for years? Did I know in 2015 that Brexit would propel pound to collapse through this support a whole lot faster than euro did? I did not know in 2015 about Brexit, but I told you, pound will go into free fall to 101. Euro is holding this support, pound isn't. Brexit news propelled it drastically lower. This is where pound is already. Remember that? It's very, very temporary. Price is heading drastically lower. And this is very powerful reminder of the reversal zone on euro. Let me remind you. Remember that level? 3,800? Anyone surprised? Should not be. This is reversal zone. You know the rules. Take a trade. Trend inception, market collapse. This is where price is sitting now. This was a hot pink Fibonacci level on weekly. That famous 3,400 number was broken. This famous 1 number on monthly will be broken as well. Nevertheless, it must be respected. Do not ever acquire position near this level. Do not ever acquire position into reversal zone. By the time you come near reversal zone, you are in significant profit. If you ever acquire position into end of minor trend, success is not possible. And that's exactly where oil is struggling right now. And that's exactly where oil in pain, at the end of the minor trend. Long term, my bias absolutely bullish on oil. But it's all about this key 55 level. And that's a key. When price will come to this level, what oil will do next is crucial. This level is out. Bullish rally on oil will go on. And that's the exact same formula that applies to any instrument and any time frame, as price action remains the same. Doesn't matter if it's euro, doesn't matter if it's oil, doesn't matter if it's gold. That's absolutely the key. Price the same everywhere. Master the price. Do not block your vision. That's the key. And this is exactly what gold is doing nowadays. One of the funds I worked with in December 2016, one of the fund managers that took a course acquired position on gold at trend inception and exited position on gold at this level. Levels present in the trading room for years. How to trade these levels? You must know the rules. What to do at this level right now is the key. Entering into this Fibonacci resistance, not an option. And gold reminded you. Bearish trend is minor. Exact same hot pink line as you saw on all the prior instruments, from euro to pound to S&P to Apple. Formula remains the same. The worst place to be, overextended bullish rally. Acquiring position into Fibonacci reversal zone, never an option. Playing by the rules is the key. And that's what oil doing right now on daily. Remember oil on daily, chart present in the trading room for months? Absolute collapse, absolute pain and torture. Do not buy overextended bullish rally into Fibonacci reversal zone. Your success rate 20%. Right now, bullish rally on oil is unstoppable. Pullback on oil respected the end of the minor trend. This level is out. Oil continue bullish rally until here. Where to place the trade, you must know the rules. And this is what I teach in the course. Course is 8 weeks. Class is ongoing. New class starts on Monday. And this is what you master every day. Acquire position at the trend inception. Trade wave 1, wave 3 only. Never ever ever acquire position at the end of wave 3. Will not work. Success rate 20%. And that's exact same formula that remains the same. No matter if it's Nasdaq, 5-way structure, market reverses after. No matter if it's 3 waves, which is the core of the method, wave 3. No matter if it's up, no matter if it's down, do not buy at the end. As you clearly saw in the example on euro, in the example on pound. As price action remains the same on any instrument, any time frame. Here is euro. Do not buy at the end of wave 3, it will never work. Do not enter into Fibonacci level, as Fibonacci identifies crucial support and resistance in the markets far in advance. Trade from Fibonacci levels, never into Fibonacci levels. No matter if it's euro, no matter if it's oil, no matter if it's Google. This is the cleanest chart of all times. If you look on this chart and you do not understand market structure, market will never be cleaner than this. 5 wave, major waves. Ended at Fibonacci resistance. No surprise, where sharp bullish move had ended. Every time, the same thing. Since 2011, I worked with traders from beginner to hedge fund trader, traders who trade any instrument, any time frame, as price action remains exactly same everywhere. If you had enough of delayed indicators and you are interested in learning Fibonacci and trade as graduates of the course do, I will highly encourage you listen on the website to graduates. If you come to the website and you click on word learn, right above the course info, you can listen to what students trade. Students from beginner to hedge fund trader who trading anything and everything that has price. From ETFs to stocks to options to FOREX. My students become dearest friends for life. I'm meeting with students next 2 days in New York, following week in California. Students from 18-year-old to 80-year-old joining the course. What you trade, what you apply the method to, absolutely your choice. I will highly encourage you review the information on the website if you are interested in joining, and never hesitate to contact me. info@fibinstitute.com 925-257-4298. Both group and private mentoring course include online manual, include guide-guided trading room, live classes Monday and Friday. You learn how to set up proprietary Fibonacci tool on any platform of your choice. You learn proprietary Fibonacci strategy, strategies that apply to charts from 1 minute to yearly charts. Strategy classes every Monday after the close of the trading room, and Fridays 11 to 12, no class this Friday. Fibonacci analysis every morning before trading room open. Psychology is the core of the course. As everything in life, 80% psychology, 20% skills. When I work with you in private mentoring, I set up Fibonacci tool on Ninja Trader. I work on your execution, and if you master the basic course, I take you well outside of the basic course. I teach you strategies that not part of the regular course if you master the basic course. Execution in day trading is everything. That is absolutely addressed in private mentoring. 8 weeks, you can start any day you choose. Group course, 16 weeks private mentoring with annual follow-up. After the course graduation, you can continue with ongoing education, with access to all the classes. Ladies and gentlemen, this is what I would like to share with you in this webinar, and I would love to answer your questions about the instruments of your choice. So if you think of the instrument you would like to ask me about, all you have to do is post the name of the instrument and time frame you would like me to review. And this is how crucial you understand. You must have proper settings. Look at all of these options. Oh my goodness! Are you using instrument settings? Ouch! Bad idea. Should never do. If you're using instrument settings, you're missing a whole lot of data. Look what will happen next on gold if you are using World Daily. This is gold. And this is what happens if you're not using correct settings. Data will be missing from your chart. Is gold still on April contract or no? Please let me know a contract date. Are we still on April? Please remind me. Gold, continuous contract on weekly, which is what I work with. If you're using gold daily, is it still April? Biniam? Knowing what settings to use on your platform and never applying World Daily randomly to your chart is a key. You must know the settings on your instrument. World Daily, you're missing at least 30% of data. My favorite chart by far is weekly. If you do trade daily, you demand very different template. Never World Daily. And that remains the key. So, you must absolutely demand every single second in the market. You cannot miss data. That remains crucial. That remains the core. Knowing what data to use, knowing how to set up your technical settings is crucial. You absolutely must have every single second in the market. Never miss a moment in the market. This is entirely different looking chart. Look at that. Shocker. Data is not missing. Does anybody see any gaps? Previous chart had 30-40% of gaps. This chart doesn't. This chart is solid and beautiful. This is a trade. This is a chart you should trade. Not World Daily. 14-40 minute only. This is what gold miners had done when they came to reversal zone, stock collapsed. If you understand that this is reversal zone and you exit your position, you're extremely wise trader. You're applying Fibonacci levels and you understand that bullish rally doesn't mean a thing if Fibonacci reversal zone in front of you. Market reverses from this level despite any news, despite any other events, 80-85% of the time. You trail your long position very carefully and you never buy into it. Market collapsed completely and right now market in massive bullish correction. As long as this key Fibonacci support respected 2250, bullish trend is major. This is a place where you monitor for your long position, only if you know the rules. But this level is a big problem. This is a channel gold been stuck for the last months. Acquire position at Fibonacci support. Do not enter into Fibonacci resistance. Bad idea. And that's how you trade. Using Fibonacci levels, using Fibonacci rules. I could have sold you this Fibonacci software 6 years ago. You cannot trade it if you don't know the rules. You cannot schlep Fibonacci levels on your charts randomly. It will not work. Put Fibonacci levels on your chart, learn the rules, apply the rules. Identify what's appropriate for you. Your risk management, your psychology, that's the key. And if you trade long term, understand, weekly chart is so much better than daily. And if you trade stock like Kate, I have no idea what that stock is. It doesn't matter to me. It has absolutely no meaning whatsoever. Please remember the beauty of hot pink line, as bullish trend is minor. No surprise. Where Kate reversing from? What in the world is this stock? I've never heard of it in my life. Please let me know. As we always have minor trend, we not always have major trend. Obadiah, that's your question. And that's your level. And that's very powerful reminder. Never ever ever acquire position into Fibonacci level. Did not matter. The spectacular bullish rally did not mean a thing. Let's take a look at what to expect on Kate now, shall we? And as you can see on this chart very clearly, bearish trend is major. Price currently reached reversal zone. This is bearish trend exhaustion level. Shorting near this level not an option. Price reverses from this level sharply, 80-85%. Price can crawl down, but shorting near this level not an option. If you short near this level, your success rate less than 20%. And that's how Fibonacci keeps you out of trouble. That's simple. Fibonacci reversal zone is reached. You monitor for reversal. And that's exact same thing that happened on S&P, which is SPX derivative. Let me answer the question about NQ. If no time frame is posted, I will simply pull up the first available time. David. Here's NQ. Here's your day trading chart. And here's very powerful reminder. What NQ had done today was very beautiful, as I said, for months. This institutional bias is simply breathtaking. The only wise thing to do? Monitor for pullbacks and never ever short against institutions. Ladies and gentlemen, 5460 on NQ is a big problem. 5460 is the end of the minor trend that NQ respected since last week. If you took a long position by the time you come to this level, you are in significant profit. You do not buy near this level. This level is out, NQ heading drastically higher. Where to enter? You must know the rules. Placing a random market order in day trading, never an option. Knowing the difference between limit, stop limit, market order, knowing how to place your brackets is everything. And that's crucial, and that's key. And that's what method all about. No matter what you trade. No matter if you choose to trade short term or long term. Price action remains the same. The only difference, traders' risk management and traders' psychology. If you come to the website, I highly encourage you. Browse the blog, browse YouTube channel. For all the previous events and recording from the trading room going back months and years. As you can see on YouTube, multiple trade examples. Today we had absolutely fantastic morning when market tested us for patience and discipline and then took off with vengeance. This is a video from this morning that you will receive in Thursday newsletter. And that's where we are. Any other questions, please do ask. Again, when you ask me a question, Tang, showing you, no matter what you trade, you never short into decision point 1, the end of the minor trend, where Apple reversed from, where you're stuck for 2 years, where CYCC staged one final bullish push until reversal zone. and then suddenly reversed. But this Fibonacci support respecting this level, exact same level as S&P respected on monthly. Identical formula, no matter what you trade. As I said, Obadiah, as you listen to students on the website, price action the same everywhere, no matter what you trade. You're trading 1-minute chart, you're extremely aggressive trader. You want consistent, solid profits, you trade charts higher than 5-minute. You use 1-minute chart as your barometer chart. Any other questions? Please do ask. The only difference between S&P future daily, never word daily, only 14-40-minute chart, is SPX is the derivative of this chart. Structure is identical. Absolutely identical. S&P future is the most popular day trading instrument in United States of America. SPX is favored of futures traders. This is to remind you where bullish rally came from on SPX. Again, in front of you, S&P future. I'm bringing up SPX next because difference is extremely small. As S&P future day trading instrument, and SPX is very popular with option traders. Is a beautiful place to be as an investor. One moment coming up. I'm showing it's on the chart. It's smiling at you, Roger. 1440. It's looking at you. As you can see. 1440. Never word daily. Knowing the settings on your platform is a key. Every time I show in the course how these settings matter. Here's SPX. Picture perfect reminder, identical chart to S&P future. Bullish rally reached reversal zone, identical as SPX. Bullish rally in massive correction. Do not use word daily, use 1440 minute. It's smiling at you. Knowing the rest of the settings is crucial. If you do not have correct settings on your charts, on your templates, on your bracket orders, you cannot trade. That's absolutely core to your trading. As I said throughout webinar, price shows you where the stop will be. As I said, every single chart, every single trade is a different stop, different target. Today was dissected with students trade that had 1 point stop, 1 point target, trades that had 3 point, 4 point, 5 point target. You choose what you want to trade. Trades play out on multiple charts. Look how many charts in front of me. Look, 30, 40. What do you want to trade? Choice is yours. You decide what you want to trade. I work with traders who have accounts as small as 10,000. I work with traders who manage multi-million-dollar accounts. You identify what stop appropriate for you. You set up the bracket order that's appropriate for you. How big is your account? That determines your risk management. Every single stop, every single target is not random. It's based on strict rules. One tick in day trading makes a world of difference. So ladies and gentlemen, in the next few days I'm in New York. I'm presenting and working with hedge funds and meeting with students. Next week I'm back to teaching. We're starting from scratch on Monday. Next week I'm back in the trading room. So Thursday morning, monitor your inbox, monitor your spam just in case. Add that email so you will not miss trading room invitation and all sorts of wonderful events on Monday and Tuesday next week. If you are in beautiful Southern California, we're meeting with students in Southern California next week. You do not have to be a member to receive the newsletter. And all the newsletters always posted on the blog. So if you miss the newsletters and you would like to go back years, I'll post it on my blog. And that's the key. If you would like to sign up for private mentoring, pretty please call me first. Most of the days fully booked all the way through summer. If you would like to sign up for group sessions, you can sign up on any moment, on any time. Everything on website completely automatic. You can study modules online until the class on Monday. Monday, April 10th, we start brand new class. If I ever take few days off, if I ever leave on vacation, you will always receive extra time in the course. It's never a problem. Nothing ever a problem. I live and breathe what I do, and I meet with students in US and globally. Next month, I'm meeting students in Asia. If you are in New York, if you are in California, I look forward to meeting you. Time and time again. Life is magic if you live and breathe what you do. Fibonacci, what forms the markets? In Hong Kong, in Thailand. World is extremely small place, and students live everywhere. And one of my favorite students of all time, Sam, is a legend in the course. He lives in Damascus, Syria. He trades in war zone, currently most of the time in Beirut. If he can do it, what is stopping you? He trades options. And I hope and pray we'll be teaching what he trades, my method with his options, to the graduates of the course. We have extremely close community. Fathers bringing their children to the course, children bringing their parents to the course, students from complete beginner to hedge fund trader. What you trade, absolutely up to you. This is Carol, one of my favorite traders in the course. Very powerful trader, very disciplined trader in Texas. So, as I said, all the information on the website under Learn. Course 8 weeks. If I take few days off, if I will leave on vacation, you will receive extra time to compensate for time off, and during time off you will have access to all the online materials. 8-week course, $32.77. Private mentoring, $7,977. Includes trading room, Monday through Thursday. Includes live classes where we address strategy rules, proprietary Fibonacci tool, long-term Fibonacci levels, short-term Fibonacci levels, pre-market analysis, money management, all in the course. If you join private mentoring, all the group courses, all the group access included. Thank you, ladies and gentlemen, so much for your time. I'm off to New York. Look forward to seeing you on Monday. Have a marvelous afternoon and never hesitate to contact me. Feel free to call me. 925-257-4298. I promise you, I will always call you back, and if I'm available, I will always pick up the phone. I simply love what I do. Thank you so much for your time. Have a marvelous afternoon. Thank you, Rob. Thank you, Binyam. Thank you, Jan. Never hesitate to contact me. Have a wonderful evening. Thank you.